How's it going, investors? Ari Gutman here with the TipRanks team. Now, I'm excited to deliver through on some more stocks for your consideration, given they're all trading within their 52-week low ranges, plenty of upside from each of them according to top analysts across TipRanks, and most importantly here, shelling out dividends to their shareholders. So without further ado, let's dive right in. So before we go any further, I want to take a quick moment to shed some light onto why these particular stocks I'm about to mention are worth the honorable mention in the first place. As we move into the week, the Federal Reserve will be announcing the next interest rate hike, and as we speak, the market has been and remains full of fear regarding just how high this hike will be. The suspense is building the uncertainty, but the hike itself alarms investors, which is why we've not only been experiencing volatility, but may continue to experience it. Therefore, the three stocks that we have for you today are, of course, investments that have proven themselves since their founding and, moreover, have been dividend investments delivering through on more certainty for their shareholders during uncertain times. With that said, our first stock of the day is Potlatch, which is a real estate investment trust based out of Spokane, Washington, and in the business of manufacturing as well as selling lumber. In addition, the REIT generates revenue from other assets such as mineral rights and leasing the land. Currently, Potlatch has an enterprise value of $4.12 billion. However, amidst all of this market volatility, we've seen the REIT fall in the share price, to which it is now trading at a 52-week low around $43.54 per share, which is down from nearly $58 per share at the onset of the year. That makes for a 24.17% decline in share price. But analysts on TipRanks are forecasting a little over 34% worth of upside potential, with an average share price coming up to $58.60 per share. And we can also see a fair amount of buying from investors across TipRanks, with a 5.2% increase of portfolio holdings. Now, more interestingly, is taking a look at what smart money has been doing when it comes to this REIT. And of course, we can see that hedge funds have been increasing their positions with the REIT, most notably Fisher Asset Management, with an over $6.6 million invested. And until we get more certainty in the market, along with a rebound of Potlatch's share price, shareholders will fare very well from a dividend yield coming in at 3.97%. Next up, we have International Flavors and Fragrances, which produces, flavors, fragrances, and synthetics used to make cosmetics. International Flavors and Fragrances was originally founded back in 1958 and has since grown into an industry-leading Fortune 500 company with a market capitalization at $26.11 billion. Yet with our current market conditions, we can see that it's currently trading just over 30% down on the year at $102.40 per share, which creates potential opportunity for the value investors out there, because while this fragrance leader may not be as exciting as a tech titan or a startup, it's likely to continue to deliver through on those profits for shareholders. And of course, that's exactly why we see hedge funds like First Pacific's $187 million investment into the company, or EdgePoint Investment Group's $375 million position to boost your confidence, or even Ray Dalio's Bridgewater Associates position of $17.4 million. Now, it's always just a positive sign to see such large sums invested from top-tier hedge funds. As for investors across TipRanks, they too have been increasing their positions with International Flavors and Fragrances, especially within the last 7 to 30 days. And when it comes down to analysts, there is certainly forecasted growth from 10 analysts on TipRanks, ranking this opportunity as a strong buy with an average price target of $143.20 per share. Now, on top of that, shareholders will also be collecting on that 3% dividend yield. And finally, our last stock of the day, a management consulting firm that has been in business since 1969 and has come a long way since their founding. We're talking about Korn Ferry, which has blossomed into a global organization operating in 53 countries, employing over 8,000 in over 100 offices around the world. Korn Ferry's success has led to the firm amassing a $2.61 billion enterprise value. Now, given the times that we're currently living in, with companies across the board reducing costs, Korn Ferry has seen a decline in business, leading to its share price sliding over the year, whereas it was once trading for roughly $77 per share and is now down on the year by 35.33%, trading for $49.28 per share. Now, they have a PE ratio coming in at just 8.1, and with analysts across TipRanks optimistic about a rebound with an average target share price rising back to $64 per share, very well may be worth to add to your watch list. Now, if we go ahead and toggle with what hedge funds are currently doing, given smart money has been scoring more shares of the company last quarter, we can see some hefty sums worth of capital from hedge funds invested into Korn Ferry. Now, we also see that investors across TipRanks have followed suit with over 6% worth of portfolios on the platform, adding shares worth of this consulting firm as well. And of course, shareholders of Korn Ferry will not only reap the reward of this stock rebounding in the share price should it reach the analyst expectations, but they're also going to collect on Korn Ferry's dividend, coming in at a dividend yield of 1.01%. Now, investors, there you have it. 3 more stocks that our team is bringing to your attention, given the upside potential that they have according to top analysts across TipRanks. Now, please keep in mind that today's video was not intended to be stock advice, so we strongly encourage each and every one of you to jump onto TipRanks to actually perform your due diligence if you're thinking about adding any or all of these positions to your stock portfolio. However, we'd certainly love to know your thoughts on these stocks or what you're currently buying, so drop all those comments down below. And until next time, thank you for tuning in.